Hey, good morning. This is Mayor Valensky with Driving Markets. Hope you're all well. Okay, the usual caveat: anything said in this piece is an opinion only for media publication, not advice, not investment advice. Any trading you do is on your account, and you benefit or you lose accordingly. Okay, so let's kick off. So the last few days have seen significant falls in US equity markets and UK and European markets. Again, it's the same old fear of recession, the fear of rising interest rates. That has driven markets a lot lower, and that's going to continue driving markets lower in the foreseeable future until the end of the interest rate cycle is in sight, and it's not in sight at the moment, and therefore that's going to feed into global financial markets. You're going to have further falls. Looking at something more specific is the pound and the currencies, the dollar, the euro, pound and the yen. Specifically, I want to focus a little bit on the pound. The pound has been absolutely trashed and is at an all-time low against the US dollar, running at 106.50. Very depressing for those people who make the money in pounds and want to go touring or want to spend. They just get nothing in return for their money. And unfortunately, that's going to continue because there's two things happening. Number one, you've got the US with rising interest rates and a strong economy. So the dollar is going to get stronger there. And then you've got the UK with a weakening economy and not aggressive enough on interest rates. Now that's all likely to change because of the weakness of the pound. What's likely to happen is Andrew Bailey and the MPC in the Bank of England, they're likely now to aggressively look to support the pound and look to increase interest rates dramatically. Now that could or will cause extreme misery on mortgage holders. So you could have an interest rate rise out of the blue of 1% or 2% in the UK as a counter to the pound falling, because they're not going to allow, the Bank of England and the UK are not going to allow the pound to go into free fall, because that significantly impacts on the economy, and that effectively will cause inflation to rise. Why would it cause inflation to rise? Because the cost of imports into the UK effectively will go up. And as the cost of imports goes up, then the price of those will go up. So two things will happen. One of two things will happen. Either the UK consumer will stop buying foreign goods because they're too expensive, or they will pay for them and the price is going up, and therefore that will feed automatically into inflation numbers and just produce a higher inflation reading over the next few months. So a weak pound is bad by all aspects. Everyone around does not want a weak pound, and especially the government, especially the Bank of England, and they're probably going to have some now aggressive interest rate policy in order to support the pound. So you could see very volatile times in the UK. Hopefully they'll sort it out, because to put more misery on the mortgage holders will just send the economy further into recession. Last week's mini budget, which in my opinion was a complete and utter disaster, which was looking to give away, was a political move more than an economic move. They say, let's get the economy going. Well, getting the economy going by lowering stamp duty is a political move, because that's not going to get the economy going. All that's going to do is increase property prices even further, and that's going to make it more untenable for the average household to go and buy a house. So that stamp duty giveaway was complete and utter joke, and the Conservatives have made a complete mess of that mini budget, and it was mainly for politics and not for economics. So there you go. The euro. Now the euro is already at 95 to the dollar. I've been stating all along, you check all of the driving markets publications, whether on YouTube or whether on Instagram or Twitter, I've been calling that the euro has been going down to 95 to the dollar for a long time, and it has. It's reached there, and now it's likely to go lower. Probably, I'm calling it now 92 to the dollar, because the dollar is just going to continue being strong over the next coming months. It's probably overbought the dollar, but there's no end in sight of its weakness, so therefore I'm calling the euro at 92 to the dollar. As far as oil is concerned, oil went up a little bit yesterday due to supply issues, so that's a little bit called up due to supply issues. The yen is so weak, it's just going to go to like 147, 148. We've got Bitcoin and cryptos. They're going to go down to around 15,000 level. Bitcoin's going to go down 15,000 near term, probably 10,000 by the end of the year. The high tech stocks, look at Facebook. I've been telling get rid of Facebook. What's called Meta now. It's now 134. That's going to go to $100 a share in the near term by the end of the year. Meta's going to fall to about $100. Apple's also going to go to around about the $120 by the end of the year. Apple is a long-term sell simply because they're cash cowing all the time, as I mentioned this over and over again. And then you've got things like the Netflix and the Amazons. They're also going to go down, and keep an eye on those because they're all high-tech stocks. And the high-tech, the NASDAQ, is going to be sold off significantly. There is a view that this is the end of the selling cycle. I don't hold that view. I think it's going to continue, and you're going to see a lot more significant falls in the near future. Keep an eye on the pounds. I'd like to see what Andrew Bailey is going to do there. And that's it for now. This is Mayor Valensky, Driving Markets. Have a good day.